All right, for more on this, let's go to Bloomberg's Equities reporter, Stephanie Hughes. She joins us now. Stephanie, Rogers is being downgraded by some today, as well as that hit to the shares. Tell me more about the why on that.
Certainly, yeah. So Rogers shares fell by over 7% today at its lowest point, and that was enough to bring the stock price down to its lowest level since 2012. So it's been a while since we've seen the stock price at this level. And there's a lot to unpack with the Rogers story, but let's start with that Scotiabank downgrade that you alluded to. So what happened was that analyst Mario Yagi cut his recommendation on Rogers to a sector perform rating from a sector outperform rating. That's kind of like moving a stock to a hold from a buy rating. Yagi and his team pointed to Rogers Bank, which is the credit arm of the telecom company, and said that had been a significant drain on Rogers' cash flow over the last 2 years. He added that the cost to finance the Rogers Bank credit card more than offset its efforts to reduce wireless churn and keep subscribers on. That downgrade came just a day after Sportico, a sports media outlet, reported that Rogers renewed its 12-year deal with the NHL for $11 billion. Like you mentioned, it was more than double their initial agreement. So TD analyst Vince Valentini said that the reported headline number is sure to raise some eyebrows, and added that shares could come under pressure, at least in the near term, given the uncertainty around the deal there. Rogers declined to comment, so we'll have to see what the company ends up saying about that deal. But he did acknowledge that once the dust settles, it shouldn't really be a negative development for Rogers, and the company was actually able to sell a portion of its rights last time. But until investors and analysts are waiting for more clarity on the deal, and until then, we might be seeing some more pressure on the stock there, Marilla.
Got it. Okay, let's talk about BRP as well. They make recreational vehicles in Quebec. They're benefiting from a sale. So who is buying?
That's right. So those shares gained by over 5% at its highest point today, biggest gain in nearly a week, and a short reprieve after the Skidoo maker agreed to sell its Telwater business to Yamaha Motor Australia. So Telwater is an Australian aluminum boat manufacturer that's been a part of BRP's recreational vehicle portfolio. So this move to sell off this marine segment would free up BRP to focus on its core power sports business, Skidoos, ATVs, all those fun toys there. So the story around BRP more broadly is that it had been under some pressure over the past few quarters after being hit with a double whammy of a slowing consumer environment and, you guessed it, tariffs. So that's expected to further weigh on consumer spending and just make their products more expensive, especially the steel and aluminum tariffs. BRP shares are down about 31% so far this year, and today's reprieve marks a small rebound in that front there, Marilla.
Okay, we will leave the conversation with you there. We appreciate the update, Stephanie. Thank you so much.
Thank you.